So you talked about second market and secondary markets for liquidity in later stages of investments. What do you, or how do you perceive information transparency in that stage of a company? Is it similar to private equity investing? Is it more difficult to get adequate valuation information out of these companies in order to accurately evaluate them at that stage? How does that work?
Well, so, that's the difference between the public markets and the private markets. So if you're going to go public, you file a disclosure statement and with the SEC, and once a quarter you file, I'm sure you all know this, you file your financial statements. It's required by law, and you can't be a public company if you don't do that. As a privately held company, there's no obligation to report any financial information. So for there to be a highly liquid private market, the way the NASDAQ would operate, you would need to have some form of transparency about financial information. That doesn't exist today, and frankly, I don't think companies, the privately held companies, are all that eager to provide. So the way the market works today, the way the secondary market works today, is that a late stage private equity, late stage venture capital firm calls me up and says, gee, we'd really like to buy some stock in one of your portfolio companies. And I said, well, company's profitable, it's growing like a weed, and they don't need outside investors, so it's unlikely that there's going to be that kind of opportunity. And then they might say, well, do you think any of the founders want to sell, or do you want to sell? And we say, well, maybe. It depends on price and terms, and then we invite them into a conversation that looks almost identical to the conversation as if they were going to invest in the company. So there's a due diligence process. We give them access to the management team. We give them access to the financial statements, and then they come back and they say, we think the company's worth $500 million, and we buy 20% of it for $100 million. And then the company and the investor decide if there's enough demand for that, and if there is, a transaction happens. So that's the state of the secondary market today, and I think it's going to look like that for a long time to come. I think that the highly liquid market is a much more difficult problem to solve, and that's why you see companies like Facebook and Zynga doing these secondary transactions and then doing them with a tender offer to the employees, and so that they want to soak up all that employee. One of the reasons that the secondary market developed is that Facebook had a lot of employees leave over the past 5 years, and those employees have to exercise their options when they leave. And if you got 25,000 or 50,000 options when you join the company, and the strike price is $1, you need to spend $25,000 or $50,000 to exercise those options. And a lot of these early employees, they may be sitting on $2 or $3 or $4 million worth of Facebook stock, but they don't have $25,000 to exercise the stock. So they desperately running around Silicon Valley trying to find somebody to give them, $25,000 to exercise the stock. So they would sell 25. So the deal would be, I'll sell $25,000 of my stock to you, but you got to give me the $25,000 so I can exercise the stock, and then I'll sell a piece of it to you. So that's really what started to happen, and so then there started to be a lot of people running around Silicon Valley, trying to find Facebook stock that they could buy cheap from ex-employees, and then that spread to Yelp and LinkedIn and Twitter and Zynga and so on and so forth. And all of a sudden there was, a fair amount of transactions happening, and the companies didn't like it very much, and so that I think has led to these larger sort of brokered and arranged transactions that often have an employee tender associated with them. And that's the state of the market today. And I do think that there's a company called Second Market here in New York, and there's a couple of other companies as well that are trying to create these more marketplaces. I mean, I think it will happen, But I think there's a lot of hurdles to overcome along the way, and this information transparency one might be the biggest of all.